presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Your truth is personal to you. Your own opinions and point of view reflect your own agreements and are personal to you. It's no one's truth but yours. Market-wise, let's take a look at it out here. We have the Dow Industrials down 15, up 59. NASDAQ is down 57. S&Ps are up 5.5. Gold contract flat, 13.0140. Silver up 4 cents, $16.74 an ounce. Let's go right over to the silver market first and take a look at it, because you could talk about divergence. We get some heavy divergence inside this metal market out here. We've done 116,000 contracts today in the silver market. You hit a high of $16.93, sold off 20 cents from that high. Bottom line, you got some good juice under this. We took out the last swing high out here, which was on May 11th. That's saying we're going to be right back topside. Silver has really shown some strength. They did no doubt sell it off 20 cents, which is a big number. That being said, when you push into swing points, you have the volume behind the move, which we had. You're going to be right back up into those levels. Gold contract, what do we have with gold? Gold's done 234,000 contracts. We hit a high of 1307. It's at the higher end of where we've been trading, since the gold got smoked on the 15th of May. That's when the gold went from 13 to 20 down to 1294. Had volume behind the move. That took it out of the range, and it's been battling to get back into that higher range. The higher range being 1315. Notes and bonds, really impressive. Bottom line, 10-year note takes off topside once again. Big volume. You've done 1.9 million contracts right now. This is a classic. Came back into its strength. The strength had 3.4 million contracts. We went below it yesterday with 1.6 million. You go topside today with 1.9. That's harmony in the marketplace, folks. You've gone up off the bottom with volume. You pull back with lighter volume. We're building cause to go back topside once again. 30-year bond, same type of setup inside the 30-year. 30-year was actually a real classic, because I don't believe the 30-year actually, yeah, it did break under it slightly, right? 142, yeah, it broke underneath it. So the strength in the 30-year was 142.14. Bottom line, you've done 382,000 contracts today. When we had gone up on the strength on the 29th, we did 600,000 contracts. You pull back yesterday with 307. You're at 382 right now. Good, nice setup. These are decent setups. King dollar. What do we have with King dollar? For all those gold bulls out here, bottom line, King dollar is not doing much. You're down 244 ticks. You are back inside the range. The lower range is 93,480. Gets in there. It's timid right now, though. 17,000 contracts. Bottom line, we'll see. Number one, if it closes inside that range, meaning because you only need, what, 440, we need 50 ticks to get above that range, and that can be done pretty quickly. coming into the close. Let me bring this actually a little bit closer. So let's see. If I just take this. Okay, so yeah, this is going to be interesting. So at 10 minutes of 2, you did have a buyer in here. We've done 17,890 contracts. Well, 557 of those, someone just came in and bought. That would be the positive. The negative here is that you do have a high volume low at 93,290. So as we come into the close, it's going to be a big number as to where good old King Dollar wants to go. What is intriguing is that what seems to be happening here, the market is taking basically conniptions on the dollar pulling back at all. So it's really intriguing how this is kind of working out. Each and every time the dollar takes a little tick down, it seems like out of nowhere, the market will just go south. What we had out here today is it's the composite who took us higher, basically is dragging the Dow down. The composite out here today, we had broken all-time highs yesterday. You got to a price point today, you hit a new high today of 76.97. Right now we're at 76.26. Now, bottom line, that's back inside the lower range. Well, not lower range because we're at highs, but you're back inside the high that it took out yesterday. That's major. That's major. That okay, it can't handle the price in one day. That's saying, guess what? We're going to basically try to move into lower price. We take a look at the 3 Qs. 3 Qs did the same deal. 3 Qs, the high of March 13th was 175.21. Yesterday hit 175.89. Today we hit another high, 175.93. You close right now at 174, so you get a failure on price. And inside the NDX 100, this is a crucial one because you also have a failure on volume. So the NDX is saying, guess what? That baby wants lower price. And we would see, number one, are you going to get an expansion of volume as that moves to lower price? The strength versus the weakness inside the NDX 100. You have Dish Networks up 3.2%, Costco's up 2.2. You get Skyworks up 1.9, and Express Scripts is up 1.9. You're taking away from it. You have MELI down 7.4%, big number. That's the Brazil internet equity. And Brazil, by the way, is getting smoked beyond belief because of their real, because of their currency. You get Seagate Technology down 6.4%. Lam Research is up 5.6%. Vodafone is off 5%. Inside the Dow Industrials, so you can see inside the Nasdaq and the composite, you're not just down. Some of the stocks are down 5.5% in one day, which is a big number. Putting strength into the Dow Industrials. We're up 56 points right now. The leader out here is Big Mac. McDonald's is putting 48 positive points. You get Chevron putting 23. Home Depot's putting 13. Taken away from it, the culprit is Boeing. Boeing's negative 28. Visa's negative 16. Microsoft's is negative 10. If we do go over to Microsoft, let's take a look at Microsoft. Yeah, they sold us down a bit. Nothing heavy. Stay right there, folks. Coming right back. Our phone number is 877-927-6648. We have the Dow up 56, Nasdaq down 57, S&P's up 5. Come right back. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. For your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 54. You get the Nasdaq down 58. S&Ps are up 5.5. And let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday. Don't forget, folks, Andy's got an outstanding show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. He also has 2 great newsletters. He has his daily newsletters. That's called Daily Essentials. He's got his weekly, which is the Technomento Commodity Report. Now, you can test drive both of these, 30-day money-back guarantee, by coming over to our website at TFNN. You go to newsletters. If you'd like to get the daily newsletter, just go to Trading Newsletters for the Daily Essentials. If you'd like to get his investment newsletter, which is the Technomento Commodity Report, just go to Investment Newsletters. Andy Heck, I'm sure you're getting ready for tonight.
Oh, yeah. Well, we'll see what happens tonight. We got to win tonight. Got to win 3 in a row, but we'll see.
Hey, that's...
It's not out of the question,
no,
but
it's not.
Highly unlikely.
Okay.
We'll see. We'll see. One at a time, right?
One at a time. One at a time, baby.
What I'm getting ready for, really, is next week. Because I think next week is going to be like one of the busiest weeks in markets in a very long time. We have some agenda. We have the G7 meeting this weekend, which is a very tense G7, given the tariffs and that stuff. Then we have the summit with North Korea on the 12th. We have the WASDE report on the 12th. We have the Fed meeting on the 13th. We got the ECB and Bank of Japan meetings. There's a lot of stuff going on next week, so get a lot of rest over the weekend.
There's action. There's action,
man. There's action. Oh, there's going to be action. You know, I don't remember a week where there was so many things on the agenda that can really impact markets.
Yeah, no, I can see that. You know, so silver, gold.
Yeah, silver, gold. All right, gold's in a coma at $1,300. Silver's working its way higher. It's acting more like copper than gold, certainly here.
Well, did you see that the copper deal is pretty intense? Because Bloomberg had an article this morning that there's one entity that has 40 to 44% of all the metal in London.
Yeah, well, that's very possible, and that's always an issue. But I think there's a couple of things going on in the copper market. I think that market participants got pretty bearish on the tariffs issue on copper, And, you know, so that caused some short covering. We saw a stop on the 5th get executed. It was above a technical level. I think it was at 321.60, and it got filled at 325. But the market kept going. You know, it got up to 331.55 today. So short covering triggered it. I also think that, listen, the fact that China is fighting pollution and there's less smelting and refining means that demand for copper in China is going higher. And that is supportive of the price of copper.
So how does, let me ask them, how does it, because in the article, I got the article up right now. So the article says exchange data showed a single entity controlled 40 to 49% of the metal warranted in the Bourse Global Warehouse Network. At the closing of trading, that position is worth $644 million. So I know in the past, I mean, it used to be that, the guy over in Japan, he was like the copper guy. You know,
Kamanaka.
It would come out later that, he's the one that owned it all.
Yeah.
So when they say an entity, they don't let you know who the entity is, but they're just saying that there's one whale in there, right? Is that what's going on?
Right. Now, it could be Red Kite. You know, that's Michael Farmer, a big hedge fund.
Yeah.
But as John in Philly is pointing out, the LME is Chinese-owned since 2013. So the bottom line there is, you know, if it was manipulated before, it's even more manipulated now, that market. You know, there's always a potential for that. But you're getting a nice price rise here that's coming up towards the top end of the range. Since January 2016, copper has been in almost a picture-perfect bull market. You know, we never ever. And let me put a copper chart up here for like a month.
Yeah, no, I love how it has set up. I guess
we've gone up and then we've consolidated. First of all, we consolidated back in 2016. Then we moved to a higher level. We spent like 6, 7, 8 months consolidating, moved to a higher level. Then another period of consolidation. This consolidation is about 7 months old now. So if the pattern holds, we're ready to move to the next level, which is around 345 a pound.
And all we have to do is take out, I think, 332.20, and you got yourself a beautiful ABC structure up that.
Exactly. Yeah. So, you know, and copper, listen, copper is a bellwether, Tom. So copper is telling us a lot about, you know, inflation, the global economy, all these kinds of things. So the bottom line is that copper's a leader here.
Yeah, no, I can see that. There's no doubt about that, man. And, you know, if we bring this back, if I put this on a continuous contract, folks, what you're going to see is that when copper took off, here, I'll bring it back 20 years, because what you're going to see, the biggest, well, when things change, that's when Merrill Lynch had closed their commodity desk, and they had one of the biggest commodity desks. They closed it right at the beginning of the bull market in commodities of 2001, folks. 2001, right. 2002. And you can see if we look at copper then, copper was 70 cents. That was in December of 2002. By August of 2003, copper never looked back. It went from 78 cents, and we were up at 416 3 years later. So
I think before 2008 or something, we never traded above $1.61 a pound in copper.
Oh no, I get 416 in 2006.
No, 461. 461. Now, let me just look at a quarterly chart here. Let's see here. The high, my chart is too. I'm going to have to widen it out.
Yeah, the high is 464. That's what I have.
Right. But before, let me see this. So $1.61 was like the high, and we never traded above that level until 2005.
Oh yeah, right.
Right. So the bottom line is, you know, copper's in a new sphere here.
Oh yeah.
And like most commodity prices, I mean, listen, gold, look at gold. You know, nominal price of gold before, you know, in 1980, we got up to 850, 875. And then we were below that level until what, 2006, 2008, something like that?
Yes.
So, you know, this has been in a lot of commodities, but I think what copper's doing now is really a telltale for other base metals. It's not just copper that's moving up. Nickel's moving up. Lead's moving up. You know, zinc is back around $3,200 a ton. The price of lead is up because of the demand for batteries. All of these industrial commodities are moving to the upside.
Yeah, no, it's impressive, man. There's no doubt. There's no doubt.
So the other thing is the tariff commodities that I'm looking at here. You know, very interesting. We're seeing big bifurcation over there in the grains. So they sat on the soybeans today, and they sat on the corn because those U.S. biggest producer of corn and soybeans in the world.
Okay.
And you know, tariffs at 25% gonna leave a lot of inventories for farmers this year. If that transpires. But wheat, we're not. We're an exporter, but we're not the biggest. Russia, Australia are big, and the bottom line is wheat's not going down. So I'm looking at the grains as tariff markets.
Yeah, stay right there, all right?
Yeah.
Stay right there, folks. Andy and I are coming right back. We have the Dow up 95, NASDAQ is down 50, S&Ps are flat. Andy and I are going to be coming right back, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 95, Nasdaq's down 51, S&Ps are off 2. Talking with our man, Mr. Andy Heck. We are talking commodities, talking markets. Bottom line is that, you know, what's so intriguing here, Andy, is that as you just said, the wheat market, I mean, that little baby does look really strong. You know, so the real question is going to be, I guess, it's not a weather market, right? I mean, because that hasn't happened yet, but looking at it, bottom line, a lot of people are looking at, okay, we're going to get some drought coming into the summer, right?
Yeah, I mean, the wheat, wheat in Russia and in Australia looking a little dry, and that's why you're getting support there. But I think that, in corn and beans, they tend to follow wheat sympathetically in a normal market. But we are in anything but a normal market. Tariffs are a problem for U.S. China buys 1/4 of the U.S. soybean crop each year.
Okay.
And 25% tariff, they ain't going to be buying it from the U.S.
And have they put that on?
They're threatening it. They're threatening it.
Okay.
And let me tell you, the stuff that the commodity, the soybeans that are ground zero, they're still growing. You know what I mean?
Yeah, right.
So it's a real tough one here. And also, when it comes to corn, which has really been under pressure, hey, it's kind of a delayed reaction from oil, because remember, corn is the primary ingredient in ethanol in the U.S. And with oil down, ethanol's down, and demand for corn to make ethanol is down. So, the bottom line is that tariffs and energy weighing on those corn and beans, but the wheat, hey, that's a different issue here. And the fact that the oil seed and the corn are not following the wheat to some extent is a sign that tariffs are really involved in these markets.
Yeah, well, I guess inside the corn market, right, that something went on with the EPA that now they're not going to have to basically use as much ethanol, and so the ethanol folks are kind of flipped out right now, right?
Right, that too, but certainly also the lower oil price is weighing on it, no question.
So let me ask you this. Brazil, right?
Yeah.
What big crops do they have, and are they priced in U.S. dollars? Because if we pull up this reel, it's amazing.
Well, let's talk about what big crops. First of all, soybeans, but the season's over.
Okay.
Oranges, coffee, sugar. Those are the big ones. Now, the real is going down. That means that they're selling more, because when the real goes down, it goes up. The value goes up in their local currency, so they sell more into the market.
Right.
But, you also had this logistical problem, this trucking strike there that seemed to have come to an end. So that's putting some pressure on prices again. I think sugar and coffee rallied off the back of that trucking, of those logistical issues there. But the bottom line is, they're going to sell. They're going to eventually run out of selling, and the prices will go down to the bottom end of the range. But I still think that when it comes to coffee and sugar, hey, I'm a better buyer of these commodities at the bottom end of their cycle than I would be a seller here, certainly.
It's amazing. I mean, it's amazing how much value so in 5 months, folks, the real has basically lost 25% of its value versus
Which
the
means
dollar.
that sugar in their local currency has gone up by 25%.
Yeah, but I guess my point is that that's what I'm trying to figure out, is that do they price these in U.S. dollars as we're buying them, or do they actually get priced in reals?
Well, the dollar is the benchmark pricing mechanism for everything. But their costs, their production costs are in real, because when they have to employ people and when they have to, pay for local things, they're paying in local currency.
Right. So that would mean, if like the way that the South African miners work, and miners in general, they love it when their currency is weaker and the dollar is there, because their expenses go down dramatically.
Of course, and it's the same for them. But, these are annual crops. They've been selling. Their currency's been weak for a while, and they've been selling.
Yeah.
It comes to a point where, you run out.
Yeah.
It's an annual thing. So the bottom line here is that, the agricultural commodities, in Brazil, it's a big currency thing. Look, in the meats, you have the same thing going on in Argentina, where their currency got destroyed, right?
Yep.
And you have beef prices at the lowest level in, since 2001.
Wow.
So, but when it comes to the whole commodity sector, the whole thing, I think you got to put your eye on copper here, and you have to say to yourself that, there's so many things going on from the macro level here and from the micro level that are affecting. And, you know, the central bank said they're going to take a symmetric approach to the inflation target, which means they're going to let it go up above 2%.
Right.
You know, that's a leap of faith because, you know, when inflation starts going, it's not very easy to just rein it back immediately.
Right. And you know what happens, folks? This is pretty cool. Well, it depends whether it's cool or not. But it's all our perceptions. And if we think, and we haven't been in inflation for so long, and, you know, Andy and I, I'm sure, remember the last bout, is that once it catches on, and if we think that every single day the prices are going to be higher, guess what? It just accelerates.
It's a buying frenzy.
Oh, it accelerates it so quickly, man. I remember, I guess, and was it during Nixon or who was?
It was the late 70s.
Yeah, it was the late. I mean, God.
It was Ford. It was Ford.
Yeah, it was Ford. You go into the supermarket, folks, and I'm not exaggerating. Every single week, the groceries were going up. I mean, big too.
Remember the slogan was. Whip inflation now.
Yeah, that's right. That's right. That's right.
Remember that?
And if you want to hear how bizarre this is, folks, that's when interest rates were 14%, but real estate was still worth a fortune because real estate was probably going up by 28% a year. That's right. It was like a bizarre.
Listen, the bottom line is that inflation eats away at money, and the central bank policies over the last decade have flooded the system with currency.
Oh, yeah.
And that's, you know, listen, and when you talk about the global economy, it's like the biggest ocean liner in the world.
Right.
That's why it's very hard to slow down recessions or recessionary, and why it's very, very hard to slow down inflation, because once it starts galloping, hey, they're going to have to look back and say, look at all of this money we put into the system. The bottom line is we ran the printing presses, and now all of this capital is worth less because prices are going up. And
that's when folks are going to get rid of it. That's when they absolutely have to get rid of it. It's just, you know, it's just like basically all the Russians. Bottom line, the oligarchs, all they did is buy property in London, Paris, New York, right? That's the bottom line.
Right.
You got to get rid of the ruble, you know? So it's like,
right,
okay.
You got to get rid of it, and you got to get a hard asset.
Right.
Whether it's real estate or gold or, you know, or other raw materials or diamonds, or that's when you say artwork. I mean, we do have inflation. Look at the prices of artwork. Look at the prices of fine wines.
Yeah.
I mean, look at the prices, by the way, of classic cars now.
Right. Yep.
You know?
It's been on the run. Yeah.
The bottom line is, you know, if you really stand back and look at it from 30,000 feet and compare prices to where they have been, you know, over past decades, you definitely have inflationary pressures, and the central banks have really done very little. Look, the Fed raising 25 basis points next week is not gonna turn that off.
No,
you know what I mean?
It's not. Cooking, brother. We look forward to the show. Hour and 20 minutes.
Thanks a lot.
Thanks, man. Have a great one. Have a safe one. I hope you guys win tonight. That way we'll be 3-2. Beautiful. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now up 105. You get the Nasdaq down 46. S&Ps are off 1. And even for the composite, you know, bottom line is that this composite is trying to get some gains back. This composite came down pretty fast this morning. We started at the highs of 76.96. You basically, we gave up, yeah, that's right, 76.96. Holy cow. And we went down to 75.97, so you went down $100. And you can see from the 1:30 this afternoon, you're crawling back topside. And now it's going to be tough for it to get over this 76.50 mark. That's where it kind of really broke down from. If we go take a look at the 3 Qs in the correlation, the NDX 100, same deal. You know, the 3 Qs went from a high out here of 175.93, got down to 173.55, and it's clawing its way back. We're at 174.61 right now. 32 million shares traded, and in this particular case, the number to keep your eye on, doesn't look to me like we're going to make it, is that 175.21 area. That is the high that we actually had taken out yesterday and today. Small caps, bottom line, sideways moving the small caps out here today, down 57 cents, trading 166. XLF, the financials. So financials out here, bottom line, still having a tough time. You know, you're bouncing, you're pushing against the swing points. The volume's not bad out here today. We did 58 million. We take a look at this, you're going into 52. So this is starting to get up into these levels with some volume. Now, that being said, what's going to get intriguing is this. So you get Italy that's hanging out there, bond problems, right? We get the currency problems in whether it's Argentina, whether it's Turkey, whether it's Italy, whether it's, well, not Italy, whether it's Brazil. And then what's hanging out here is Deutsche Bank. So Deutsche Bank, folks, it's pretty amazing last few days how many different things are coming out on Deutsche Bank. They are moving as fast as they can, it seems, and changing quite a few things, meaning they're cutting back in states, they're moving out of states. They're claiming that they're still going to be a big presence in the U.S., but simultaneously what they're doing is that they're basically shutting down. Just coming across at 12:30, now they're shutting their Houston office. They're trying to sell a non-investment grade portfolio, and they're looking to sell it at par. So right now they get a $3 billion portfolio. I suspect what that is, if they had an office, let's see what they have to say. Deutsche Bank is seeking to sell its portfolio of non-investment grade energy loans worth about $3 billion The Frankfurt-based lender, which in May said it was closing its Houston office, is planning to sell the loan book as a whole and has been marketing it to its North American and European peers. The portfolio is expected to sell at par value. The bank's energy business is expected to wrap up on June 30th. One of the people said the bank has been an active lender in the energy space the past year, participating in finance of companies Peabody Energy, Coronado Australian Holdings. The decision to retreat from energy deals is among the cuts that the chief executive officer looks to make to restructure his investment banking operations globally. Bottom line is that if we stay on this equity, you're going to see that this equity not only has trouble. Bottom line is it looks like it wants to test this 990 once again. We get down to 1057 last month, and this is having a tough time. And we'll see whether that's going to be one of the implosions. And so when we take a look at Deutsche Bank, let's go over to Goldman Sachs. So Goldman right now, this, bottom line had already broken its high volume low from February 9th. That's 239. You're down at 234 right now. Can't seem to get any traction. And what this is going to be all about, as is the rest of our U.S. banks, it's going to be, do they have counter-trend risk with Deutsche Bank? Do they have counter-trend risk with the bonds coming out of Italy or Spain? That's the debt structure. What does happen in Italy is that the folks that are really going to have a problem in Italy, it had that the ECB folks had bought almost 25% of the bonds that were floated in Italy. So they were the buyers of those bonds, and that's how they've been able to basically keep pushing out more debt. And it's going to be who's holding the paper if, in fact, some of these either countries and or equities, being Deutsche Bank, start rolling over. Some of the higher volume equities that we have out here inside this market, you have GE basically is flat. We got Micron down 15 cents. You get Twitter off 49. Comcast is down 25. Facebook is down 331. You get Cisco down 25. Let's go over Lam Research down $10. You get AMAT off 141. Facebook, we go take a look at Facebook. Facebook right now kind of off $3, but still hanging at highs. What's intriguing about the Facebook deal, of course, is that each and every day, you get more bad information, but guess what? They haven't been selling it off. They have not been selling it off. Google, take a look at Google out here. Google is trading down $13. 1 million shares. Now see, with Google, that's also going to be a pullback with light volume. We just went topside with 2.4 million shares, 1.8, as well as what's the first day there? Yeah, that's 3 million. You're backing down with 1.2, so Google doesn't look like that is going to be done also. We go take a look at Amazon. Amazon right now is trading sideways, down $7. Netflix, NFLX, all the FANGs out here. Netflix also trading sideways. That's down $6.07. Microsoft down $1.74. No big deal there either. Those equities really haven't pulled back whatsoever, and now that they're basically so high that these sideways moves, that's just what they are. Lam Research, LRCX, different ball game. Lam came off the highs, and Lam is what was really putting some juice inside the NDX 100 today. Lam is down $11.29, trading 188, monster volume. So Lam, you're going to see, is going after the swing point that was out there from April 25th. That swing's 181. You're at 188. We hit 184. Get an expansion of volume. I expect it's going to go after it. And Lam is almost parabolic the way it went up also from March of 2016. We went from $63 up to $234. We go take a look at NVDA, NVIDIA. That's been hitting all-time highs. Still up there. You're $263. Your all-time high is $266.59. AMAT is getting hit with Lamb Research out here this morning, and this looks like, yeah, you get high volume low at 48. Right now you're trading 51.24. Stay right there, folks. Come right back. Dow Industrials up 95. Nasdaq is down 51. S&Ps are off 2. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Back, folks. Dow right now up 107. Nasdaq is down 50. S&Ps are off 1.5. Facebook's down $3, and it doesn't. It's so intriguing. I was just talking about. It seems like every day something else comes out. Well, check it out. So just coming across Facebook, coming across the tape rather. Facebook had a software bug for 10 days in May that set the audience for people's posts to go public, even if they had intended to share them with just friends or a smaller audience. Facebook is saying that that affected 14 million people. Facebook is going to start to individually inform people who were affected with the bug. Would like to apologize for this mistake, said Erin Egan, Facebook's chief privacy officer, said in a statement. Facebook has fixed the privacy settings for posts during that time and will let users review any affected content to make sure that the audience is what they wanted, she said. Bottom line is that in the latest It's the latest in a series of revelations about Facebook privacy lapses. The company is currently facing criticism from Congress for data partnerships with the Chinese companies. Facebook, of course, is still dealing with the March revelation with Cambridge Analytica, the consulting firm that basically got information on as many as 87 million people without their consent. Pretty intense, man. Bottom line is that you can imagine, though, on Facebook, you know, you think you're doing something private. Bottom line is it's public. Bottom line, I suspect, which I think most of us really understand, is that anything you do on the internet, period, can end up being public. There's no two ways about that. Volume-wise out here, let's take a look at it. Inside the NYSE, we're dealing with 596 million right now, so that'll end up doing about 700 million into the close. We take a look at the NASDAQ Composite. Composite out here, let's see. Composite is running, yeah, that'll run, we're at 2 billion. That'll probably get to 2.2. Stay right there, folks. Coming back with some numbers after the close. Dow Industrials up 85, NASDAQ down 53, S&P's off 2.5. We're going to be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But yeah. Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow Industrials up 95, NASDAQ up 50, down 54, S&P's up 1.5. We go over to the Dow Industrials first. Let's take a look at the Dow. Bottom line, yesterday what you had, Dow broke over the consolidation it was in. That break was 25,086. We're at up 95 right now. You're at the 25,241 area. And the next swing point up here, folks, is up at 25,449. We take a look at the volume, what you have out here. In the volume, we did 897 million out here, which is not bad for the Dow Industrials. Inside the NASDAQ Composite, what we did volume-wise inside the Composite out here today, you did 2.1 3 billion shares. What you did have with the composite out here went to a new all-time high today, got to a price point of 76.97. We closed out at 76.35. Bottom line is that that's coming into, the 13th. So let's go take a look at March 13th and look at that setup for price and volume. We know that on price it failed. We'll see on volume where it stood. So the 13th of March, 2.4 billion. Okay, so 2.4 billion. I believe we did 2.3 billion out here. So subtly that, yeah, 2.292. So bottom line is that you get a failure on price and volume, but just barely. The NDX 100, the 3 Qs. What the 3 Qs have done is this. That made another all-time high out here today. That being said, bottom line, we closed at 174.43, and 175.21 was the number. We did 37 million shares versus the high that it had taken out with 55 million. You know, what we have here, folks, is that you're going to come into Friday. You get summer trading. I don't expect a lot of action out here tomorrow. Some of the higher volume equities out here, we had some divergence inside the chip stocks. You had Lam Research down $11.50, where NXP Semiconductor was up 5.5. We had Advanced Micro, that was down 78 cents. Ford was up 6 cents. Facebook was down $3.16. That's actually a sideways move, though. Wells Fargo was flat. You had Applied Materials down 128. That did come down with some volume. Gold, bottom line, they keep selling gold. Gold got up to 1307. They sold it down to 1301. If you want to see, which this always blows my mind when it's this dramatic, and inside King Dollar, it is this dramatic, okay? So when you talk about swing points and, you know, does the world know where swing points are? Well, guess what? The world does, and coming into the close, what the dollar index had done, dollar index got back inside the lower range. This is the second day that it did that. That being said, it was anemic volume. It was only 18,000 contracts. Well, guess what? Coming right into the close, the first buy to try to get it up higher was at 10 minutes of 3, I believe. I had done this earlier. Yeah, there's the first buy right there. Yeah, it's 10 of 3. And then you had another one come in at, look at that, 10 of 4. Same, interesting. 10 of 3, 10 of 4. Bottom line is that it got back inside the higher range. The index closed out at 93,445. The number is 93,440. So that is saying that tomorrow the index, once again, the dollar index wants to bounce. Now, the scary thing about the dollar index in general, the dollar, the way the dollar is trading right now, is that it is putting a hurt on major currencies. Now, what's interesting is you really can't see it just looking at the index. You go over to the Real in Brazil, you go, we'll just bring this up so you can see how dramatic it actually is. We just went from 310 up to 390. It was trading at 312, okay, 312 on January 26th. So it's 312 reals to $1 US. Now it's 390. That is putting some major hurt, folks, on that economy in general, on the buying power in a huge way. And that, of course, is not the only currency. You get the Argentina currency getting whacked. You have some of the other, well, Indonesia's getting whacked. So we'll see if, in fact, that starts riling the market up. Gold, silver. We take a look at the silver market. What silver has done, third day in a row, big volume, had the price spread in it, nice move. We got to $16.93. You did 118,000 contracts. That's big contract volume. It did give it up by 20%, 20 cents rather. But when you get volume like this, this I suspect is going to be right back topside. The divergence I just don't get. You know, it's silver and gold. They can move separately, but this is very unusual that you would see silver move 3 days in a row and gold can't catch a bid whatsoever. The note and bond market is saying quite a bit. So the note and bond market, what's really intriguing here is this. So picture, we have the Fed meeting next week. The Fed's going to be meeting on the 13th. The probability that they go up on rates is it's about 100%, 25 basis points. That being said, you know, when we take a look at this, it's like it's pretty amazing, actually, that they are still buying notes and they're buying bonds. And what we have out here, you know, bottom line, people want to get their money back. They want to get their principal back. That's what's happening here. So we had a big move both in the notes and bonds out here today. The 10-year note was up 11 ticks, 200,000 contracts traded. Let's go over to the TLT and take a look at the TLT. That did it too, man. 20-year bond fund plus ETF, huge move, up $1.15. And if you want to see, you know, bottom line is that we rejected lower price yesterday with 7.8 million shares. We go topside today with 12 million. This wants to make its way back up to the high volume high of 122.52. The real kick is going to be, can it take it out? Can it go topside? It looks like this market is setting up for next week. And when I did have Andy on, there's a lot of action that's going to be happening next week. A lot of different meetings, a lot of different news that's going to be coming out. Stay right there, folks. Coming back with our man, Mr. Basil Chapman. We're going to be growling and prowling with you. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at AVGO. That just come out with numbers. Broadcom closed at 264.68. Bottom line, they're trading at 264.68. decent numbers. Numbers out here, the estimate was $4.68. Earnings, they made $4.88. Revenue, the estimate was $5 billion. They took in the $5.02 billion. And their margin, the gross margin, the estimate was 65.4%. They did 66.5%. Hasn't moved the stock, but bottom line, good numbers. Let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the second hour. Don't forget, folks, Basil's got an outstanding show right here at TFNN. Every trading day, noon to 1 Eastern Standard Time. Also has a great newsletter. He has the opening call. You can get a 30-day money-back guarantee with that. Come over to our website at TFNN. You go to newsletters, you go to trading newsletters, hit the opening call right there, 30 days absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
You're a trooper. You're on a little vacation, yet you're calling in. Thank you so much, man.
It's my pleasure.
So, what are we going to look at?
Okay, so to put it in perspective, and a week from tonight I'm having a webinar, and that webinar is going to really be important because it's at a critical period, the halfway period of the year. And I'll put into context in a moment, but just if you remember last Thursday when I was interviewed by you, I discussed the fact that we had gone short the Dow, and there was a sharp down day. But the very next day, Friday, gapped up. So Monday, because the semiconductors were still very strong, the NASDAQ, the NDX 100 QQQs were still strong.
Yeah.
I thought to myself, there's no way that they want to pull this market back at this particular point. So we, at Monday's opening, went back to long. We're still long the Dow. It's been a really good week of rallying. Now, what's really important, you can see on the charts here, the daily chart, the technicals are good. The MACD is very strong. Stochastics at 74%. I prefer it higher. But the weekly chart, and that's what I'm going to be discussing next week, what's going on with the weekly charts and the monthly charts of the indices are still very strong.
Okay.
There's a pattern that I discussed in the Dow. It's called this lowercase h. You can see I drew the template a long time ago.
Yes.
It's got a little arch formation and then a second arch formation. We're into the second arch. So this is going to be very important because there are a couple of aspects that are very important in terms of the technicals. Look, the MACD is just about to cross positive with 1 day to go for the week. If they cross positive, there's a chance we could keep going. But if we do if what I call deflect, if the price of the Dow pulls back sharply over the next 2 days instead of making new recovery highs, that MACD could start to move lower, and the stochastic is good but not great. So this is a very important period. Why? Because looking at the different sectors, and this is what I'll be discussing,
yeah.
The semiconductors have been leaders on the way up and the way down for the past 2.5 years.
Yes.
At this particular point, they're under the 114.55 all-time high that was made the week of March the 16th. You just mentioned that you've got Lam Research very weak. You've got, what was it, NBX, I think. You've got another semiconductor.
AMAT, right.
Right, and they actually improved quite a bit. So what I'd say, we've been long the SMHs for my subscribers to my opening call for all of May, and we've actually had the 3 times long SOXL. It's an ETF. So what I've been saying is let's take something off because these are huge profits. But this morning for my subscribers, I said, hey, at 32%, I just want a little bit left of the long side. Let's just make sure that you're holding long, but only a very small position. Why? Because of that very thing that you were discussing. There's a very mixed sector rotation going on in the semiconductors. This is part of what I'm going to discuss Thursday week. Have the semiconductor stocks run their course? Are they going to take quite a bit of a consolidation? Or are they going to continue to lead on the way up? And that's why it's very important at this particular stage to analyze it and to actually be correct, because if they start to pull back, you can expect some kind of a market weakness. Within that context, you've got the IWM leading. It had a very strong session. That's the Russell 2000, led to all-time highs. The QQQs have followed, and there was weakness today in the QQQs, but they went to an all-time high. There's a V-shaped pattern in the weekly chart. So I would put it this way, that the next 3% move up or down in the semiconductors, the NDX 100, the IWM, is going to be really important, because if it is up, that could say that the summer is going to be very strong. The market will continue higher as both a short squeeze unfolds as well as new buy. If there is a pullback, then I'm anticipating that that arch formation that we were looking at, it's in the Dow and the S&P, is going to say they need to wait a little while, because the Dow is still over 1,000 points away from its all-time high.
Yes.
So within the context of what we're doing and what I'm going to be discussing a week from Thursday is how are the financials doing. I spoke to you last week. I said we are along the KRE, which is the regionals. They've done very, very well. They're at recovery highs. The XLF has been lagging very badly. So that's the money, the money market. That's the money center banks, and they're lagging quite a bit. Even if you look at Goldman Sachs, this is just not great action. So this is a very mixed market. We're still holding long our United Technologies in the Dow. Out of the Dow stocks is one of the ones that I've liked the most lately. It had a 17% correction from the 139 February high down to the May 115 low. So we've been long since about 119, trading at, it hits 127 today. I still like it, but this is going to be another tell, because if you Triple M and United Technologies aren't able to sort of carry the cyclicals to higher highs at this particular point, that's part of what I'm expecting is going to be resistance that really handicaps the upside. So this is a very important period that we're looking at this moment. And another thing that we've spoken about is the TLT.
Yes.
That is bonds. So my contention was that the yields are consolidating, but they're consolidating at highs. They're not breaking down. They're holding quite nicely. But this is going to be very important for yields as well, because the TNX, which is trading right now at, let me just get this, the TNX is trading at 29.33. That's 2.933%. It made its recent high in the weekly chart, that peak that I was looking for, at 3.13%. So they're in the higher range. If you're looking at it historically, they still have broken out in the monthly chart, way above the 9-period moving average. The dollar. So this is this whole package is quite complex at this particular time. Yet you've got strong leadership that up until today was working very well. How we consolidate is important. And, we're still long the dollar, although I'd mentioned to you that the dollar had made some kind of a short-term top in the Chapman wave at 95.03, 29th of May, and we've been long since 90. I'm going to try to keep this position. I think that the weekly chart is saying that the dollar could pull back some, but it's holding extremely well, and that 92.50s is probably very important support. It's trading at 93.43 right now.
And folks, the way that you get in Basil's workshop, come over to our website at TFNN. You'll see it right in the top of the carousel. Subscribe to workshop June 14th, 6 o'clock. Bottom line, test drive is opening call, 30 days, comes with a money-back guarantee. You're going to get a great newsletter. You're going to get a great workshop. Basil, thank you so much, man. Have a great one. Have a safe one.
Thank you, Tom. You too.
Stay right there, folks. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And, in the first hour, folks, I was actually talking a bit about the financials, about Deutsche Bank, the counterparty risk. And what's going to get intriguing next week is the biggest deal on market meltdowns or currency meltdowns are basically who owns what paper from what banks. That's what it really comes down to, because these banks deal with each other on a continual basis. What we are going to see next week is the Federal Reserve is going to put in a long-delayed restriction on U.S. banks. And what this is going to be all about is going to be about counterparty credit limit risk. So let's see what they're saying here. So Wall Street mega banks can expect new limits on how much credit exposure they can have with each other as the Federal Reserve prepares to approve this long-delayed restriction next week. The so-called single counterparty credit limit set for a final vote by the Fed governors at their June 14th meeting was prescribed by lawmakers to keep banks from becoming interdependent as they were before the 2008 financial crisis. A version proposed in 2016 would have capped a big bank's credit exposure to any pair at 15% of Tier 1 capital. Mark, the Fed said in the industry exceeded by about $100 billion at that time. The Fed has made multiple stabs at the rule after, having abandoned a more restrictive 2011 version for the latest one in 2016. It's pretty amazing, man. I guess we're just lucky that nothing's happened since 2011 from this point on. The most recent proposal includes restrictions on banks with as little as $50 billion in assets, but it's not clear whether the regulator will continue its trend of easing the rules for smaller lenders. The limit was designed to eliminate the threat that trouble at one big bank will bring down other banks. Former Fed Chairman Janet Yellen said when the Fed proposed the rule more than 2 years ago. The credit crisis had demonstrated the dangers of letting the biggest financial firms get so intertwined that the collapse of one endangered the others, as with the failure of Lehman Brothers Holdings. Yellen's successor, Jerome Powell, has led the recent efforts to rethink some of the Fed's key banking rules with the help of his supervisor, the Vice Chairman, Randall Quarles. Both were appointed by Trump. The Office of Financial Research created at the Treasury Department to study risk in the financial business, hatched a contagion index to measure the potential spillover of a lender's collapse. And it ranks Citigroup and JP Morgan Chase among the most interconnected of the biggest banks' holding companies. Still, the industry lobbyists have argued that the regulators have overstated risk that had already been addressed by changes in practices, rules, and supervisory efforts. It's intriguing, man, that Citigroup, let me go look at Citigroup. You know, when you say Citigroup and then you say JP Morgan Chase, it's almost, to me, they shouldn't be even in the same sentence. So it's pretty wild that, and what I mean specifically is that, you know, if we go look at Citigroup, you're going to see the highs to the lows in Citigroup. The high was $570 in 2006, and you're trading 68 bucks, right? So you know that they have not even come close to coming back to any type of reality, because, yeah, if they didn't do those reverse stock splits, they'd be trading at probably 60 cents. JP Morgan, now a different animal. JP Morgan, you know, we're at 110 bucks. This is like almost at an all-time high, I believe. It's just off the all-time high. Yeah, you know. So, you know, you go back to 2006, JP Morgan's a $53 stock. It's doubled up. You know, you hit a high of 119. So you can see, now let's go look at this. So when we take a look at the gross, I want to look at these gross numbers. So JP Morgan, $110 billion gross revenue. Citigroup, this is where it's going to get dangerous, I bet. $74 billion. Yeah. So that's intriguing. So $74 billion and $101 billion. But as they say, guess what? The counter-trend risk, I'd love to know what kind of, who the other side of the markets are on the Citigroup deal, because it looks just, when you're first looking at it, that risk is much higher than the JP Morgan risk. That's how it seems to be shaken out. We got what you had out here with the FANG stocks today, folks. They didn't have much action. Sideways move in just about all of them. We had Citigroup, Amazon down $6, still at highs though. Netflix, we take a look at Netflix, same type of setup. Netflix was down $6, still at highs. Google right now down $13. That had light volume pullback. We're at 11.23. Microsoft, that was down $1.61. Now, Microsoft had some volume coming off the high, so it's going to be intriguing. You know, Microsoft's had an amazing run. There's no two ways about that. So it's going to be pretty wild watching where Microsoft wants to trade here. You know, we'll see whether you get any type of pullback in Microsoft. Let's go to Intel, because what you had is that you had the chip stocks pull back, but guess what? Intel didn't budge. Back down $1.15, you're trading at $55.85. Not a bad setup. Inside the commodity markets out here today, you did have copper go topside once again. Pretty amazing. Well, actually, no, copper went flat. We did go, yeah, it traded topside, traded at $3.31. Closed out at $3.26. We had, let's see, yeah, you had volume behind the move. Bottom line is that, and 6 trading days, you've gone from $3.01 per pound up to $3.26 per pound. Actually, hit 3.31 today, and hit that with volume. So, yeah, you might get a little pullback on Friday, but that baby does look like it wants higher price. We go over to the XAU, the HUI, and guess what? We're coming into Friday again in the gold market. This is going to be a challenge tomorrow. The XAU, that was flat out here, 1297.09. That is also, one second, nope, wrong one. There we go. XAU, 82.99, sideways market. Oh, this ain't a bad setup, actually. Okay. This wouldn't back down. And what we did yesterday was we were pushing with volume yesterday. Oh, this is a good little setup. Okay, so the XAU yesterday was pushing with 30 million up, going into 24 million. That's a good indication that the thing wants to go higher. Okay, so that's the XAU. which is stronger than the Gold Bugs Index. Gold Bugs Index, that went sideways today. You're trading 178. That's good, though, too. The Gold Bugs Index yesterday pushed with volume also. 20 million shares going into 18 million. So both of those setups are pretty cool coming into it. Let's go to Royal Gold. So Royal Gold, folks, this is basically hanging at its highs. They're selling this baby down today, but guess what? Coming into the close, they kept buying it back. And what we're going to have here inside Royal on a weekly basis, let me see if we hit it yet. 94, oh, I didn't hit it yet. 94.39 is the number to keep your eye on. We're pushing into that swing point with volume. We're already done for the week, 1.8 million, and you're going to 1.81 million. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's get over and we take a look at Pan American Silver. So what we've had is this. Pan American Silver, folks, this, silver stock, bottom line, broke topside in a huge way May 10th. May 10th out here, come out with numbers, big numbers. On May 9th, it was trading at $16.52. Goes topside the next day, $18.39, makes another high out here of $18.75. We put this on a weekly basis. What you're going to see, this baby's still building cars to get up into this $21 area. Sideways move out here today, not much action. We'll see if, in fact, I can get catch a better bid. EXK. Let's go take a, actually, no, let's go to AG. AG is First Majestic. This is all silver. Let's see, it's actually all silver. What do we have here? Yeah, all silver. 345 million in revenue. This baby here, now this is pretty cool because they're not all moving together. But what you did have out here today is First Majestic start moving again with volume. It's coming into a swing point. The swing we're talking about is $7.48. Now, we hit that swing today. This is where it's going to get interesting, and this is why. So it looks like we're going to have a nice ABC structure on the way up. We hit the 748 right in the nose today. We hit it with volume. And then if we take this, now watch what happens. We take this and we put this back on a weekly. What you're going to see on the weekly is that we're going to need more juice as we get up to the 780 area. But I suspect we're going to get into that 780 area. And the big number on this is 796. If you get into 796, you're going to get some big action. Let's go back to Royal Gold just for a second because I want to show you on the weekly setup how this is set up. You're up today. You're down to $1.41. We take a look at the weekly basis, and what you're going to see here is that you're coming into, oh, she is right there. We're coming into the swing point of, is it 90.51? That's 92. Okay, so we're coming into 440. Now I'm going to put this on weekly. There she is. Okay. So we're coming into 1.81 million on a weekly basis. And what's happened is that we've already done 1.8 million today. So for Royal Gold, what you have is this. You're coming into your swing. You haven't hit it yet. You are coming in with volume. That's a decent setup. That's a decent setup for higher high. What we do have is that if we stay tighter with this, what you're going to see is that $91.21, bottom line, that was from 3 weeks ago, looks like we're going to get, well, we'll find out whether we get over it. We'd have to go up another 16 cents tomorrow morning, 18 cents tomorrow morning. But we do have the volume behind the move. So this little baby is going to be a big number to see if it can get up and into that number. Well, let's go take a look at Gold Corp. Gold Corp, flat market out here today. Gold Corp is a good setup, $14.13. If we go back to the silver market again, let's go over and take a look at Hecla. You know, Hecla came down Monday, Tuesday, Wednesday. Hecla needs some juice. You know, for silver being up, Hecla's still basically a laggard. We'll go over to EXK, which is Endeavor Silver. The low for the year, Endeavor, trading out $1.94. The high is $3.24. This needs more juice. It has a high volume high, which wants to go to $3.24, but this didn't get the juice in here also. Let's go back to, I'll go back to RV. So inside that silver market, who else could we look at? Let's see. Well, we'll look at a couple, an international one. Nope. Let's go to the SLV. So, because what you have with the SLV, oh, this is a good setup. So the SLV, which is trades at 10% of the price of silver, no, trades at the silver market actually. $15.91. This is good. This came into your swing point from the 11th of May. That had 6.6 million. You're doing 8.9. That's on your daily. On your weekly, also a decent setup. And, you know, tomorrow is going to be a big day, folks. The reason being is that what is happening is that even when I look at the silver chart, what we have is this. Since April of 2017, we're coming into that downtrend. Now, silver's been off the lows, you know, since July of last year, but this is coming into, this is a nice long-term deal. Yeah, this is coming into the if we take a look at it, it's the April of 2017, and that number, a close would be above, let's call it 16 bucks, $15.99 to be exact. So that's going to be a big number. That's what it's going to do. When we're talking with our man, Mr. Basil Chapman, we were talking about the bond market. Now watch this bond, because the bonds are going to be crucial. So next week, you get the Fed meeting. Bottom line, it's going to be the probability that they do 25 basis points. The real kicker for the commodity market is going to be, okay, they do the 25 basis points. What are you going to do for me after that? Now, if I take a look at this 30-year bond, and we do put this back all the way from the beginning of the bull market, which is in 1980, pretty amazing, actually, and I do a trend line that's coming up, what you're going to see is that, you know, yeah, it looks like, you know, bonds have got killed, but we're on a long-term basis. So if you're a macro person here, we're still a long way away from breaking the trend that started in 1980. You'd have to go quite a bit lower in order to basically get into that number. When you're taking a look at this, it looks to me like it's about 12 points lower than where we are right now. So that certainly isn't in jeopardy of breaking the longer-term deal. Let me see if I can do this with the 10-year. 10-year active TY. Let's try this one. Nope. TY1. No. Generic. That's the one I want. Okay. Nope. 1 second. Sorry about this, folks. Okay. Generic. There it is. I got it. Okay. So if I take the 10-year, put this on the same, it's amazing you got to put it on a 50-year to get anything out of it. Oh, good. Okay. So we take this and put this on the 50-year. Oh, this is cool, man. So this is what Basil was talking about, too, when he was the FXY, I forget the symbol he gave him. Okay, so picture this. This is pretty amazing, actually. I brought this back to 1984. And this is right on the cusp. You know, we're at 119.30. The number here is 118.10. And, you know, it's hit it. I mean, the bottom line is that we hit it, but we rejected it. So this line's going to be huge, man, because if you come off this line, you're going to see each and every time that you actually had come off this line, you go a lot higher. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So when we take a look at this, each one of those bond markets, folks, you are right at the cusp. That's the real bottom line. Now, what's intriguing, which I was saying right before the break, is this. Each time, so picture this, this bull market started in 1980. Interest rates were 14.5%. Interest rates go down to 0. Makes sense. That's about as bullish as you can get. The 2 big places that, and this would be the third, that it's come back to challenge the market in general, meaning the bull market, goes like this. We established a high in 1998 at 123 in the 10-year. 5 months later, you're down to 98. It came off 98, and it takes off again up to 121. That's in the year of 2003. 2003, it backs down again into 2007. It goes to 105. And then guess what? It just doesn't basically look back. It goes from 105, makes an all-time high of 135. When we talk about 135, what you're talking about on these numbers, folks, is that would be paying $135 for a $100 bond. When I'm talking down there at the 104, you're paying $104 for a $100 bond, okay? And that has to do with what the bond is yielding, and that's what people will pay either more or less for that bond and for the amount of time that's left in that bond. So what I want you to get out of this is that now we're down at this trend line once again. If we get out of this trend line, your probability goes much higher that you're going to get a higher price, not necessarily go to a new all-time high, but you can see when these bounces come in, they're dramatic. We went from 98 all the way up to 121, so you had a 25% move. The last time we went from 105 all the way up to 135, you had a 20% move. So bottom line is, if we get out of this, that's saying that lower prices are coming at us once again, and yes, it's deviant, but guess what? Bottom line, they're buying the bonds. They're buying the 10s. They're buying the 30s. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Look forward to speaking to you right back here tomorrow morning, 8 o'clock. Wow! Look at them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.